Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. This man, Dimitri Pargamonik. Happy New Year, D.
Good morning, Will. How are you?
Good. Happy New Year, buddy.
Thank you. You too.
You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for.
Excellent.
There you go. And I'm going to share my screen. While I do that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And what we'll do is take a couple minutes, look at the pre-market report, so we give you guys a chance to put those questions in. And after we take a look at the pre-market report, we'll move on to the questions. Okay, so pre-market report, these are stocks that are trading in pre-market hours. Up top here, we have a calendar view, which allows you to click on a historical date if you want to see what happened in a pre-market on that date. Today, we're on January 2nd. This is what's going on so far. We have 409 stocks that are trading higher in a pre-market, 593 stocks trading lower. As far as volume goes, we got 405 million shares trading on up volume versus 72 million shares trading on down volume. And if we convert that volume to dollar value, we have $1.7 billion worth of stock trading higher versus $3.3 billion worth of stock trading lower. So from that perspective, looks like we are trading with some bearish sentiment in the pre-market hours. Let's look at it from a couple more perspectives, and we'll move on to the questions. So down here, I'm going to scroll down, and now we see a list of symbols, stocks that are trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, and our biggest percentage decliners. We have 63 stocks that made our percentage gainers list, 161 on our decliners list. That also points to a more bearish lean in the pre-market trading. However, when we look at this list of stocks, couple things here. To make this list, the trading in the stock has to meet certain thresholds that we set for liquidity, volume, price change, because things tend to be liquid in the pre-market hours. And when we look at the symbols, we do see small cap stocks in there, ETFs, leverage products. It could be a closed-end fund. It could be a preferred. So any security that meets that threshold and it's trading in pre-market hours and it trades on a major U.S. exchange, it can make this list. To narrow down this list to a small group of stocks, we could use the filters up here. If you have watch lists, if you guys saved your watch list, you can filter by your watch list to see what's trading in the pre-market hours in those symbols that you added to your watch list. Today, we're going to look at this filter in ETF. I'm going to click on it, and when you do that, you get a list of ETFs to select from. We're going to choose the first one, SPY. When you do that, the list below will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we have one stock that met our biggest percentage gainers list. We have 21 on our largest decliners list. So that also points to a bearish lean in the pre-market trading. So we looked at it from a couple of perspectives, Will, and we did give it a couple minutes if you have questions, I'll take them now.
Yeah, no questions. Jackie does say tried MC for the last 3 months. It is a very good tool. I will increase the option contracts for every option candidate given by my MC searches. That's what he says in
Yeah,
2024. That's
thank you.
Jackie's 2024 resolution.
Thank you so much. Really
Thanks for
appreciate
the nice comment, Jackie. Nothing else has come in yet.
it. Okay. Um, so
We
let's
do have because
yeah.
I think Jackie may have joined us. He'd seen us on an IBKR webinar, probably 4 webinars ago. We
Yeah.
do have an IBKR webinar coming up next Tuesday.
Yep.
Correct me if I'm wrong.
Yep. So next Tuesday, we're gonna have a webinar with Interactive Brokers. They're hosting it, so you have to register with that link with IBKR. They host it live. It's a free webinar, but you do have to register. And we're gonna be discussing a new feature that we are going to release right before the webinar. And this feature will have to do with multi-leg trades and strategies that are trading on the exchanges, actual trades that are trading on exchanges. We're going to be discussing them, how you could find them, what some of the tools to help you interpret the strategies. We'll take a look at some like top strategies. So all this will be next Tuesday with Interactive Brokers in a week. But if you want to be on that webinar, please register. You'll get a reminder email, and that will be live next Tuesday, 2 p.m. Eastern.
Excellent. Well, is there one new thing that you're working on that you think the Chameleons will like this year, or a surprise, or anything like that?
Well, that's one of the tools that we're going to be using. Yeah, the next Tuesday. That's what that's why we're talking about it now. So that's going to be one of the tools that will be available next week, right? So that's why we're talking about it now. And I think the next tool, we have a monthly webinar with Interactive Brokers. I believe that following month that will also be on a new tool that we're going to be releasing for the following webinar. We'll probably kind of follow that path. So we'll try to release those new tools, follow up with a webinar, then we'll discuss it on this show if you guys have any questions.
Excellent.
Yep. Okay. I'll default to SPY. And since, we don't have any questions yet, what we'll do is take a look at maybe SPY seasonality, since we're starting a new calendar month, January. So today will be the first day of trading. And the idea behind it is, let's just take a look at what the market tends to do in the month of January. We'll take a look at what it did in December, and just finished up. Right, we just finished up December. We're heading into January. How does the market tend to do in that calendar month? And we could take a look at it from the performance of the stock, the market, and even volatility. So let's take a look first at this seasonality tool here. So I came into SPY, and this seasonality tool breaks it down over here by, so you could see here every year for the last 10 years going back. And what we have is the performance of SPY for that calendar month, right? And then it goes down for each year. And then we have the summary stats here below. So here we just finished up December, so 2024, January, we don't have any data points yet. Today will be actually just the first day of trading, right? Of the calendar month. So that will start popping up as we get new data points. But let's take a look at how we finished off December. So here, see December, we finished off up 4.1%. And here we could see that December, it was kind of split 60% of the calendar months higher, 40% lower. The average return was negative 0.2%. So we had some big down months here that pulled down the average. If we take a look at the median return, which is the return, if we just lined them all up in order and looked at the middle, right, where we took the bottom half and upper half, the middle one, 1.1%. So, it's kind of a mixed bag, maybe a little bit, closer to leaning towards a positive side. So how did the month of January look like historically? So here's January. So these are from 2023, 2014. We see that 60% of the month of January, the market was lower, 40% higher. So far, average return was 0.4%. Why is that? Well, if we look at the data here, we see that, some of these moves to the upside were pretty large, pulling up the average, right? You got an 8% return here, 6.3% return, versus some of the negative returns, which are 3%, 1%. So on average, the returns eked out a positive return. But what if we just took the middle, right? So the median return. So here we come down here and we see it was negative 0.5%. And if we just scan with our eyes, so we could scan from negative 0.5%, we could scan with our eyes each month. We see that there are only 2 months out of the year that show a negative median return. That one is in September, negative 2.4%. So September definitely, looks like has been the weakest calendar month for the market. And that's followed by the month of January from this perspective, right? From the perspective of historical median returns. Okay. As far as the frequency of up moves versus down moves, just scanning this also with our eyes. The worst one was September, and that's followed by the month of January. So for whatever reason, profit taking or reshuffling, maybe holding off on purchases, whatever it is. So the month of January, from a historical perspective, tended to be, the second weakest calendar month out of the year. Doesn't mean it will happen again, but that's from that perspective. And what about the magnitude of the moves? So the magnitude of the moves is in either direction. How much did it tend to move up? How much did it move down? And if we converted all these moves to positive and took up the average, we would get the average of the magnitude of the moves, right? So that's what this absolute average is over here. So we could see here that for the month of January, the absolute average move is 4%. Meaning if we took all these numbers and converted them to positive numbers and took the average, it's 4%. In either direction, that's the average move. And we could also just scan these with our eyes and just eyeballing it. We could see that there were, well, you got 1, 2, so we got what's that month? October, November, above 4%. So not the highest month for, that type of volatility, but, still on the higher end, right? If we looked at all 12 months, it's, on the higher end. And if we just looked at max move, 8% here, although we did have some big moves going across the board. So the takeaway so far, as far as like the stock market behavior was, January, back of our minds could be a weaker month than the previous calendar months. And it could be a little bit more volatile relative to the other 12 months.
Hey, Dave,
Okay. Yeah.
just to confirm, I think Rob answered it correctly. We had a question from AB, who was asking, what does volatility seasonal also mean on the left-hand side link? And Rob goes on to say, I believe that the seasonal volatility chart shows the level of or amplitude of movement in the SPY or other stock for each month and how that looked seasonally. And that what we're looking at is actually the stock or ETF underlying,
Yep.
not the option volatility. Is that correct? Or the straddle volatility? Or
Yeah. So let's go to that. So this one was looking purely from the perspective of the returns, right? The return distributions for the calendar month. This under volatility, we have another seasonality tab right here. So let's click on that and go to that. So what this will do is convert the stock movements, right, to its volatility. So it'll take the returns and look at the volatility of two things here. One is it's looking at the implied volatility and then a realized volatility. So the implied volatility are the measurements coming from the options. Where did the options tend to get priced during calendar month? So is the implied volatility. So this is just based on where the option premiums are priced, that they tend to be higher or lower by calendar month, right, on a relative basis. So this chart here, okay, this chart is looking on, and it's actually a daily. It's taking, let's say, January 2nd and saying, well, what was the implied volatility on January 2nd in SPY? So it's looking at a 30-day implied volatility. And it's saying on January 2nd, take the implied volatility for each year, right? It'll go like for each year for January 2nd, and then take the average and plot that. And then it'll do it for January 3rd, January 4th. So this way we could see how the implied volatility throughout the year looked like on average, right? So this is like taking actually not just the entire month, but it's looking within the month itself and plotting it. Okay, so you have like a 10-year average here for each day, right? Do it make sense? So for January 3rd, we'll look in our database and say, well, what was the implied volatility January 3rd for 2023? What was it for 2022? What was it for 2021? What was it for 2020? Keep going back. And then take the average of all those numbers and put them on a plot. So you can see here, and I think that the average this March really got pulled up, but I think a lot of it had to do with that 2020 event, right? So that's one thing to keep in mind, where the coronavirus, that's when we shut down shut down a lot of the economy, and volatility really spiked. So here we have in 2020 a huge spike in volatility. So if we took the median returns, it'll look different. Okay, these over here are shown the average. And this kind of just visually gives you a sense of how the historical volatility tended to move for the market. Okay. And you could see here that it bounces around. It's not a straight line. Certainly, it's not showing up as this very smooth straight line. And what do we see from, what we could see from here is that it actually implied volatility itself has big variability, right? It moves around. It could move around, and it could move around a lot, right? Like you see here, get in the low double digits, we're in the 20s, then 30s, got up here in the in the low 20s. So one thing visually is that we see it could really move around. It has, it looks like certain periods out of the year where volatility tends to decline, like in the summertime. So over here, right, then it starts to come back up, decline again, and going into November, the holiday seasons, and starts to climb back up again. So that kind of appears like a seasonal trend there. And we also show the volume of the options. So these are the average volumes. So you could see here that they also move, right? They also kind of move with the implied volatility. As volume drops off, so does the implied volatility. As volume increases, the tends to increase the implied vols.
Hey, Dave, just confirming, I think I answered it correctly, but I just wanted to hear it out of your mouth. This is available, this seasonality is available for all stocks, correct?
That we have the data for.
Yeah, that we have the data.
That we have to obviously have the data for, because this data it's not a stock price, right? So the
stock has to trade options, correct?
Yeah, the stock has to trade options, and the options have to be relatively liquid that we could get a good implied volatility metric or measurement, right? So if there is a stock, even if it's a liquid stock or has liquid options, and the options are very wide, and we're not sure, if the implied volatility is 20 or 30 or 40 because the options are so wide, we just skip that because we don't have a good degree of confidence where the implied vols are really, where the markets are or where it's trading, right? So there are a couple things in there, that requirements that have to be met for us to be able to capture a implied volatility metric. Okay, so it can't be for every stock out there, because that kind of, that type of liquidity doesn't exist for everything. But the most liquid stocks, yes, obviously, like things like Apple or Meta or Nvidia, like those types, yeah. The other thing to keep in mind is that certain stocks may not, even if they're liquid, they may have not even existed 10 years ago, so we wouldn't have that data either, right? Or the options didn't exist 10 years ago, so we can't make that up. If they have options that existed for 3 years, we'll only have 3 years of data. Like, I don't know, when did Coinbase go IPO? So, because I get those questions like, well, why don't you have like 20 years of data for Coinbase? Well,
where can't make up the data, right?
Yeah, it's like, I'm like, look, it's like if they IPO'd 3 years ago, we're starting to capture the data from the point that they started. We don't have data from 10 years ago because it didn't exist. And sometimes there are stocks also that will go through some kind of corporate action where at that point we cut it off because it looks to us like a newer company that we just start over because the corporate action is like a spin-off or whatever, where it looks like it's changed material in enough that a big enough material change that we just started up as a new entity. Because let's say you have sometimes a company will spin off 30-40% of their assets, like they'll say, oh, we're like GE does that sometimes, we're just going to spin this off, now. And now that you do that, you're like, okay, well, it's kind of a big material change. And is the volatility that we were following before really apply, to this new entity? Because now you got, the outstanding shares changed, the people that are buying and selling this company may, the makeup of it has changed, or how they value it changed. So there are things that go on in the market that sometimes you have to split off the data and say it's better to start fresh from this date than try to stitch it and try to figure out, well, how do you compare, this company that was, this makeup, and then it changed drastically. So those are things that could affect it, and which we try to handle when we see it.
Hey, D.
Yeah.
AB's asking 2020 February and March, the market crashed, so Ivy jumped. It's a question. I guess on this the chart you're looking at, how do you navigate and look at February or March in 2020 to see what the Ivy did?
Well, this is by year. So keep
All
in
right.
mind, these are not, we're no longer looking at stock returns, right? We're not looking at if the market went up or down. We're looking at if the volatility went up or down.
So these are the vols over the years, and this is how you're looking at a trend.
Right. These are the volatility measurements. So the volatility, it's always positive, right? Volatility is positive. There's no negative volatility, right? The volatility, it's moving or not moving. Could be zero, but there's no negative volatility. It'll be either, zero or positive. And in this, chart up top, the visual plots the average volatility over all those years. So the average could get pulled up because of certain outliers or events, or pulled down hard, right? Because of something happening. So that's how the averages look. So, and for that, then we kind of go and say, okay, within the month. So this table here, it says, what is the average within the month? And we could look at the median too. So the median, right over here, we could see how much of a difference is there between the average and the median to get a sense of the skewness, right? If the averages were skewing or pulling the numbers higher or lower away from the median, right? So the closer they are, the less skew there is between them. The further they are, the more skewed it is because of something happening, like over here. So yes, in March 2020, the markets were basically, that was an unusual event. That's when we got hit with the coronavirus, and the government, took the steps of shutting down the economy, which is not something that we've even seen before. It's not something you could predict, or it was an unprecedented move. The market dropped, I don't remember, but significantly, whatever it was, 35%, whatever it was. So volatility spiked here, and that moved up the average. Right. So you can see here how much, that particular month, 52 vol, how much higher it is even from the next highest, right, which was in 2022, 22 long. So that's why you want to compare sometimes the average and the median, and look deeper into the data to, look for those types of situations. But I think, well, we're right up actually over 9:30.
We are. Opening bell has gone off. Awesome job, Deem, as always. Way to start off the new year, my friend. Happy New Year.
Yep.
Everyone,
Happy
thanks
New
for
Year.
joining us on the start of this 2024 trading season. Awesome job, buddy.
Yep. Thanks, everyone. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trading peace.